The Gigafactories Shanghai, Berlin, and Texas are back on track and working towards the promise of delivering 2 million vehicles by the end of 2022. Despite this exciting news, analysts have voted less than 3 on a 1 to 5 scale of Tesla's buy status. Even the 3-for-1 split did not make much of a difference as it did in the past. For this video, we will answer the question: is Tesla stock still worth buying after the recession shake? Let us begin. For Tesla fans, they are excited to hear about the cool innovation that Elon Musk has for the company's beloved electric vehicles. However, investors are all about how many delivered vehicles and how much money they will make. Thus, Tesla investors have had quite a roller coaster ride in the last 2 years. Hedge funds like Cathie Wood's ARK Invest have dropped sharply in assets due to their association with Tesla. But let us begin from the start of 2020 and before COVID-19 kept us indoors. On January 1, 2020, one could buy Tesla stock for $130.11. Suddenly, as of November 1, 2021, Tesla reached about $1,144.76. This made the company worth $1 trillion and declared it the most valuable car company globally. Nevertheless, as of September 2, 2022, the same stock you bought for $130.11 in 2020 is worth $936.72. Nonetheless, you do not own one Tesla stock at that price. You own 3. Let us explore that for a moment. Tesla split its stock in a 3-for-1 equal adjusted price for trading on August 24. The split was to give Tesla employees a chance to own equity in their company and afford the stock hanging some $205 below its all-time high at $1,200. This split was the second for the automotive company. In 2020, the company had a split that saw its prices jump 81%. This is an excellent indication of how stocks react to a split. The enthusiasm and opportunity for people to participate usually see an upward climb. Unfortunately, the 2022 split announcement came with an 8% decrease in the first few days, and it only recovered a little after the split was complete. Usually, a stock split means more people can afford your stocks, opening doors for more potential investors. By August 24, 2022, shareholders with an $891.29 stock woke up to see their stock split into 3 at $302.36 on August 25, 2022. The stock cost 1/3 of its original prices, but the stockholder positions remained the same. During the split and its uncertainties, analysts held different views of the prospects of the Tesla stock. Yahoo Finance spoke to 45 analysts who followed the Tesla stock closely in August and had separate ballots for the company's future. According to Yahoo Finance, 16 analysts said it was underperforming but should be a hold, while 3 rated it a sell. The other 26 recommended it as a strong buy. In the first week of September, 14 of the 23 analysts contacted have issued a hold, while 8 have maintained that it is a strong buy. One insists on selling the stock. We cannot blame the analysts as the prices have fallen since the split. As of September 2, 2022, the Tesla stock had run down to about $278.09. The estimated recommendation rating of the analysts is a tough 2.3 on a 1 to 5 scale. They also estimate that the price could rise between $298.80 and $461 a year. Do you agree that we could see Tesla rise twice its worth in a year? Let us know in the comments. Ultimately, Tesla cannot expect to have the growth sprint of 2020 back. The upward growth could remain, but it is unlikely that it continues like during the pandemic and beats it. In particular, the technology sector experiences such a trajectory of growth. One minute, they are rapidly growing. They slow the growth as more competitors appear. For instance, during the second quarter reports, Tesla reported a decrease in market margins for the first time. This shows that all the investments across Europe, Asia, and North America into electric vehicles are succeeding, and that Tesla needs to brace itself for a slower growth pattern. If you are a Tesla or Musk fan, you have come to the right place. Go ahead and subscribe now for more exciting content. Notwithstanding, analysts have confirmed that Tesla is here for the long game. The position of the Texas-based company is one of continuous growth. Although the company has not had the best year, its growth is robust. Despite the market pullback, experts believe that Tesla would have performed better if the Elon Musk versus Twitter debacle did not exist. Analysts say his attention is already flustering between SpaceX, Neuralink, and Boring Company. Another company like Twitter would have been an overextension of self. Therefore, dropping the deal was beneficial. According to Elon Musk, CEO of Tesla, the company's biggest advantage is its manufacturing efficiency. Thus, the recently opened Gigafactories Berlin and Texas will make the company more competitive and deliver more cars than they normally do. Elon Musk has estimated 2 million vehicles will be provided by the end of 2022 and 20 million vehicles by 2030. Moreover, there is an AI advancement that is going to outsell Tesla cars, known as the Optimus bot. Further, the battery technology that will reduce the cost and time of Tesla batteries by half is in progress at the new Gigafactories. In fact, Wedbush analyst Dan Ives is anticipating immediate price hikes of the Tesla stock. Ives says that once China's Gigafactory has revived operations, we will be headed for a momentous year-end. In a note to his clients he shared, demand is not the problem for Tesla, but supply has been, and is now clearly on an upward trajectory, with China on its next level of Model Y production, while Berlin and Austin ramp their production lines into year-end. Nevertheless, the stock market is for those who can play its game. The timing is crucial in all stock business. Therefore, one must go over the technical and fundamental analysis to ensure that there is no substantial risk involved in their investment. On that note, we will consider all the positive reviews of the Tesla stock, but not forget the timing. Twitter is still praying the courts force Elon Musk to finish the Twitter deal. The stock split did not do the magic it did in 2020. Therefore, Tesla is not a buy at this time, especially if you are a short-term investor who wants to see some positive action. The Tesla stock is below prior highs and has hit a 200-day resistance line, making it a terrible decision in the first week of September. Check out more on Tesla stock and other financial updates on our channel now.